So what's the difference in a preparation engagement and a compilation engagement? Let's suppose that you have a client that comes in and they say to you, hey, I'd like to have a balance sheet and an income statement. Don't need anything fancy. I don't need the notes. So which option would be best, a preparation or a compilation? Prior to SARS-21, we had SARS-19, and in that standard, it said that if a CPA prepared and submitted financial statements to a client, we were required to attach a compilation report. But with the creation of SARS-21, that requirement went away, and you'll recall the AICPA created a new section in the SARS called ARC 70, which is preparation of financial statements. Since that standard came out, I have found that some CPAs are confused about the difference in a preparation and a compilation, and this is the reason I'm doing this video. So let's take a moment and talk about ARC 70, preparation of financial statements, and when you might use this option. So with ARC 70, you are still required to get a signed engagement letter. So there's no getting around having the requirement to get a signed engagement letter. That's required under ARC 70 preparation. It's also required under ARC 80 compilations. So there's no difference there in terms of what you have to do. Now the language is different in those engagement letters, but both standards require a signed engagement letter. In a preparation engagement, you could create a balance sheet and an income statement, and at the bottom of each page, you would put the words, "No assurance is provided." Those are the key words in a preparation engagement. No assurance is provided. Now you could add some other words to that if you like. You could say professional standards have been followed, but no assurance is provided. So that's the minimum requirement on a preparation engagement. You get a signed engagement letter, you create the financial statements, you say at the bottom of each page, no assurance is provided. You also have the option in a preparation engagement to use a disclaimer that precedes the balance sheet and the income statement and any other statements that you might have. That disclaimer page has just one or two sentences, and you'll see that language in ARC 70 that again says that no assurance has been provided. There's some additional language there that basically says we haven't done an audit or a review or a compilation, and you're providing no assurance. Now, one thing you need to understand about a preparation engagement is it is considered a non-attest service. So you're simply creating the financial statements, and it's a non-attest service. If you do a compilation, it's considered an attest service. Now, you may be scratching your head and thinking, are you sure about that? Because we know that in a compilation that no assurance is being provided. That's right. No assurance is being provided, but a compilation is still considered an attest service. So if you go the route of an ARC 70 preparation engagement, you could prepare this balance sheet and the income statement. You could precede those two pages with this short disclaimer, which can go on your letterhead. And that's really the summation of the deliverable that you would give to your client. You can omit disclosures if you so choose. If you do omit disclosures, you would need to say at the bottom of each page that substantially all disclosures have been omitted. And that language would actually be on the face of the balance sheet and the face of the income statement in this instance. The only other thing I would say to you in regard to a preparation engagement is if you use a special purpose framework such as tax basis, you need to make sure in the title of that statement that you say it is a tax basis statement. That requirement's also true in a compilation as well. There are other requirements for ARC 70, but for purposes of this video, those are the primary things that you would need to know. So when you look at a preparation file and the CPA has finished that engagement, there's not a lot of work papers there, or you're not required to have a bunch of work papers. So it's mainly that engagement letter, and you're retaining the financial statements that you prepared and that you gave to the client. One other thing before we shift gears and move to the compilation engagement is with a preparation engagement, those statements can be provided to third parties, such as a bank. So just bear in mind that when you give this preparation statement to your client, they can walk out of your office, go down the street, and give those statements to a banker and possibly get a loan based on those statements. One last thing here, all you're really doing is preparing the financial statements in a preparation engagement. Now, let's talk about compilation engagements. And here, yes, we have to attach a compilation report. So let's go back to the scenario we were just looking at. Client comes in, client says, hey, I need a balance sheet and an income statement. And you decide to go the compilation route rather than the preparation route. And maybe you decide to do that because your client says, hey, my banker requires a compilation report. And this happens sometimes. So if the banker requires a compilation report, and the client then engages you to prepare the financial statements and to do the compilation, then you would do that. So you'd prepare the balance sheet and the income statement. It would be preceded with a compilation report, under SARS 21, and then the standards thereafter. The provision that allowed you to omit substantially all disclosures is still present. So you can still omit substantially all disclosures, and so you could have a deliverable with your compilation that is comprised of the compilation report, the balance sheet, and the income statement, and you would not have to have notes attached to those statements. Now, in this situation, under ARC 80 compilations, the language regarding the omission of the notes shows up in the compilation report. You'll recall a moment ago I said in a preparation engagement, that language goes at the bottom of each financial statement. In a compilation engagement, that language shows up in the compilation report. So in a compilation engagement, you're going to have a signed engagement letter again. You're going to retain a copy of those statements that you provided to the client. Now, what is different in terms of doing a compilation and a preparation. Really, there's very little difference. ARC 80 compilation says that you would read the financial statements to see if they are appropriate. Now, if you think about when you prepare financial statements in a preparation engagement, it's kind of hard to prepare statements without reading them. So there's not a real significant difference in what you are doing. You are preparing financial statements. But in a compilation engagement, ARC 80 says, hey, you have to read the financial statements to see if they are appropriate. Now, whether you do a preparation or a compilation, if there are obvious errors, if you see misstatements, then you have to bring those to the attention of management, and you would expect management to make those corrections or to allow you to make those corrections. Now, in a preparation or a compilation, it is quite okay to attach the notes to the financial statements. I was just talking about you can omit, but obviously you can have full disclosures in a preparation engagement or a compilation engagement. So, one question I get asked sometimes is, what is the time difference in doing a preparation versus a compilation? In other words, would I save any time by going with a preparation engagement versus a compilation? And my answer is as follows. The primary time savings would be the fact that you don't have to generate a compilation report. I don't know that that is a big significant difference. Some of the forms that you would complete would add additional time when you do a compilation versus a preparation. But either way, regardless of your forms provider, they're going to have forms that you would complete for a preparation or a compilation. The compilation forms involve a little bit more work, but I wouldn't say a substantial difference. So I'm going to end with this. What is the fastest way to generate financial statements for your client? And the answer is, if you prepare a tax return and you generate a balance sheet and an income statement, then why would you not just use a tax basis and then take those numbers from the tax return and do a tax basis preparation? And so you bring those numbers into the balance sheet and the income statement. You say at the bottom of the statement that no assurance is provided on each page. You get a signed engagement letter, and that's pretty much it on a preparation engagement. What I would avoid, if possible, is doing that tax return and then converting those numbers to a GAAP basis, which would require more time. If the client just needs a set of financial statements, then why not just use the tax basis of accounting and then you're done? So, in summary, you have the option to use ARC 70, which is preparation engagements, or ARC 80, which is compilation engagements. The primary difference is in a compilation, you're going to have a compilation report, which your client might need, say a lender's asking for that, then you would go that route. But that's the big difference between a compilation and a preparation.